Good morning, ladies and gentlemen, and welcome back to the Macquarie conference. My name is Hayden Bester, the Head of Resources Research at Macquarie. As a reminder, you have an opportunity to ask questions in the question box at the bottom of your screen, and I will moderate the Q&A at the end of the presentation. Mineral Resources has enjoyed a very strong 12 months since last year's conference, benefiting from the $100 plus rise in the iron ore price over that time. And it's my pleasure this morning to introduce Managing Director Chris Ellison from Mineral Resources. Chris, welcome back to the 2021 Macquarie Australia Conference. We look forward to hearing from you today. So over to you.
Okay, thanks for that, Hayden. Welcome everyone, good morning. Thanks for joining us. I'm Chris Ellison, Managing Director of Mineral Resources. And look, briefly this morning, I'm going to give you a bit of a run through on what we've achieved and where we're going over the next few years. This year's not a lot different so far to last year. Last year was unpredictable in the sense of trying to work out how to forge our way through with our business. We managed to do that and do it in fine style. And we're still in this similar position for this, the first 4 months of this calendar year. We've had 2 shutdowns in WA with COVID. It's been disruptive to our operations, but we've managed to keep all our sites free from the virus, and all of our sites are operating. We haven't had any of them shut. A number one priority has been keeping our people safe, keeping them at work, keeping employed so that they can pay their bills and they can take care of their family. If we get that right, the rest of it seems to fall into place. COVID testing, part of our fit for work regime. Every time we have an outbreak here, we test everybody. Everyone in our head office gets tested before they come in. All our people get tested before they go to site. It keeps them safe. We set up early last year, we set up Australia's largest privately owned COVID testing facility. It's a gold standard facility, so it does the proper test. It's a US Thermo Fisher equipment, and they supply us with all the reagents we need. It's capable of about 9,000 tests a day. And we made that available very early in the piece last year to over 60 mining, oil and gas companies to make sure we kept their workforce safe. And we did that on a cost recovery only basis. So WA has been able to continue to operate, and it's been a powerhouse in cash generation for the rest of the country. So good result that we're producing. The business is performing well, has done last year, did for the first half. We're well into our second half now. The first half was a good result. It was a great result. Second half, it's better. Iron ore prices are up. Lithium is bouncing back much quicker than anyone expected, I think. Our mining service across the board are performing extremely well. And we've got a pipeline of tier 1 projects to develop. We've got iron ore that we're bringing on strongly. We hope to start on that. We'll talk about that soon. Lithium, looking at how we can get more out of our lithium business, and mining services, of course, it continues to grow. It's got a great reputation, and we get things done like none other. People becoming a big issue. The borders are closed internationally, so we've got no fresh people coming into the community, and we've got disruption between the states. We need to find a way soon of being able to work with government and trying to bring more skilled labour into WA. It's becoming a big problem. The pond that we're all drawing from is quickly drying up. Okay, so I'm going to give you a bit of a rundown on what MinRes does for those that don't know about us. I'll talk a little bit about our recent performance, and then I'll tell you where I'm going to take the business over the next 5 years. The business as it is today, we're West Australian based. We're a mining services group at heart. We're headquartered in Perth. The business was formed about 30 years ago, and we listed on the ASX in 2006. We're sitting about number 55 on the ASX, and we've got a market cap of around 9 billion. Mineral Resources, it's a highly regarded mining services and mining business. We're well known for our can-do attitude. We make commitments, we deliver on them. It's very important to us, and we just get things done. We've got a great culture in the business, and they just don't see obstacles. We're the world's largest crushing contractor. We sit in the top 5 lithium producers in the world. We're Australia's 5th largest iron ore producer. And in the energy department, we've got the largest acreage in the Perth Basin, and we've just recently acquired the largest acreage in the onshore Carnarvon Basin. The business is made up of 4 core pillars. It's basically mining services, energy, innovation, and commodities. The mining services, it's where we started. It's the heartbeat of our business. It's the foundation of the group, and it's the engine room that creates that can-do culture right across the entire group. As I said, we're the world's largest crushing contractor. We invented the concept almost 30 years ago. And we've refined that over the years, and we've got some great people and equipment providing services to a lot of great clients. We own and operate drill and blast. We've got open pit mining, crushing, beneficiation, flotation. In transport, we do off highway, and we own our own trains. And we've got long-term port allocations down at Esperance in Kwinana and Port Hedland. Iron ore, 3 operating mines, 2 in the Pilbara, 1 in the Yilgarn. Lithium, 2 outstanding lithium deposits that certainly rank on the planet. We got Mount Marion, JV with Ganfeng, 50-50. And then we got the Wodgina mine, and we're developing the Kemerton 50,000 tonne hydroxide plant. That's in a joint venture known as Marble, which is 60% Albemarle, 40% MinRes. And again, on the energy, huge potential in the Perth Basin. And we've recently picked up more acreage in joint venture with Buru up around the Carnarvon Basin, and we're working hard on doing some stuff on that I'll tell you about shortly. Innovation, big part of our business. We've got multiple projects running. We've got green energy, we've got carbon fibre developments, transport systems, patented processing technology, and we do that sometimes in joint venture with some of the world's largest rock manufacturing equipment. I'll talk a bit more about that later. Safety of our people, critical to our business. It's pretty much everything to us. We have a high level of caring for our people. It's reflected in our safety results. We probably sit in the top 5% of the mining and services industry. We've got nearly 4,500 people on the payroll. 1,400 were added over the last 10 months. It's very challenging to continually improve on your safety results when you're bringing that number of people on. And as I said earlier, people are getting extremely hard to get, and to get these sort of results is just outstanding for our team. We're sitting at 0 still on our lost time injuries. 2.75 on our TRIFR, which is simply an outstanding result for anyone that spends all day breaking rocks. We perform better than most businesses that have people seated behind desks. Our statistics basically are a result of our in-house training and the culture that we have right through the group on the way we care about our people and the way we talk to them about how we're going to deliver our work on a daily basis, and how people are going to take care of themselves. We got a fair number of apprentices and trainees and graduates right across the business. We're growing that by number and percentage. We look for inside our business for what we call second generation people. So if you're working for MinRes and you've got a son or a daughter or a cousin that has the same culture that we have, we want you in our business. So we bring a number of those on board regularly. Wellbeing, a big part of our business. It always has been, but that's grown with COVID coming into play. Our aim is to send our people home in a better condition than we found them in. We're trying to make sure that we address their well-being physically, mentally, and nutritionally. And we recognise that there's certainly with mental health, we create some issues out there. Taking people away from their families and keeping them away is not the best. So we've recently, last year, we brought on a full-time psychologist in the business. We're going to grow this part of our business. We've got Chris Harris. He spent 15 years saving lives at Youth Focus and has added to the culture in the business and has really made a difference to the well-being of our people. We're also heavily involved in organisations like Youth Focus. We're in partnership with Lifeline. and trying to make sure that we support the community around all of our people. We're improving our work environments for our people, very important. We've got a new head office. It's going to be a Platinum V2 WELL rating. I think it's only one of 3 in Australia. We move into that around September this year. And our new accommodation facilities that we're going to build on site, we're going to move to building resort style accommodation instead of camps. We'll continue the standard of food that we have in there, but we're going to have facilities in there like gyms, wellness centres, restaurants, taverns, all staffed so people can be trained properly, and we're going to occupy them when they're not out on the mine site. We're going to make sure they're well occupied and well looked after. As I mentioned earlier, we are industry leaders in our COVID response in keeping our people safe, and we've made sure that we've kept everyone's jobs secure. Sustainability. Like everyone, I mean, we're concerned about emissions. We are committed to zero emissions by 2050. Realistically, we think that that'll probably happen at least a decade quicker than that as new technology evolves, and it's evolving quickly. Our simple strategy at the moment, we want to eliminate the use of diesel. It's the biggest carbon emission issue that we've got in our business. We're going to use natural gas and LNG to transition away from that. We're going to install solar and wind on all our new sites, and we're progressively upgrading the existing sites so that we can aim to run day shift wherever we can on solar and wind. And we're going to embrace any of the new clean energy developments that come available in the future. We will outline our pathway to zero emissions in our sustainability report later this year. Other areas of sustainability, TLOs, our traditional landowners, our farmers, our communities, our station owners out there. We sit down with them all, as we always done, and we agree on how we're going to coexist together. We understand what we can do to help them around our mining operations. We make commitments and we simply make sure that we deliver on them. We're going to launch a reconciliation action plan later this year as well. And our mine closures, quite simply, we deal with that progressively over the life of the operation of the mine. First half performance, best half to date so far. Figures speak for themselves, 1.5 billion in revenue. So all of the numbers you're looking at are up on the previous period. EBITDA was better than the EBITDA for the whole of FY20. Return on invested capital, we consistently sit above 20%. We're focused on that. If we're going to go spend money in capital, we want to make sure we get our return, and we're pretty good at making sure that happens. And we paid a dividend of $1 for the first half. Our track record, we listed in 2006 at 90 cents. We've delivered greater than 20% year on year return on invested capital. We're a very, very strong, diversified business, and we've been able to show that it grows during all of the cycles. We've got a very predictable cash flow, EBITDA and net profit after tax outcomes. We've paid over 1.1 billion in dividends, and we haven't raised any equity. In other words, we haven't diluted our shareholders, and we have a balance sheet that's conservatively geared, and it's extremely robust. Our price has grown from 90 cents to around $48 over the last 15 years. So moving forward, our growth strategy, where am I going to take the business over the next 5 years? 4 core pillars that we're focused on. The mining services, we're going to grow it much quicker than we have in the past, and that's simply because there's some great opportunities we've got sitting out ahead of us. We're going to continue the build, own, operate model, of course, on the crushing and processing, continue our normal service and delivering to our clients. I've heard in a few recent road shows that some companies out there think that we're large and we're getting a bit complacent. Be assured that we got our eye on the ball. We didn't get this big by sitting back and watching the world go by. We're very focused on this part of our business. Every time we miss a contract, it hurts us. So we're focused on delivery to our customers. We've got the balance sheet and the funding capability to do it, and we're going to develop some fairly significant infrastructure projects. On the iron ore, we're aiming to grow it from 20 up to 90 million tonnes over the next 3 to 5 years. We're going to extend the Yilgarn and Utah hubs to a minimum life, 10-year life. The lithium, we're going to pursue hydroxide wherever we can and stop selling spodumene into the market. We aim on the energy to operate natural gas and LNG, and innovation. We'll continue the way we have with that, but we're going to monetize some of these past developments, and they're going to deliver some fairly significant long-term income streams for our mining services business. So just a bit more detail around the mining services on how we're going to do this. It's our core business. As I said, we're passionate about the success of this part of our business. Our unique skill set and innovative equipment that we've created is going to allow us to develop these opportunities going forward. We aim to develop private haul roads, at least 2 up in the north. They're going to run out 300-tonne off-highway dump trucks. The costs on these are getting down towards delivering commodity from mine site to coast at a fairly comparable cost to a medium-sized rail operation. We're going to develop transshipping fleet, 20,000-tonne capacity transshippers. Ports, we want to build, own and operate more infrastructure around ports. We're focused on Ashburton and Southwest Creek and Port Hedland. Crushing and processing hubs, next-gen plants, we'll be developing a number of them. We've probably identified at least 4 that we'll be developing over the next 3 years. And we have worldwide opportunity with next-gen, and we are starting to look outside of Australia. So we're looking at a couple of countries at the moment, and we hope we can secure something in the foreseeable future. Resort-style accommodation, we're going to really ramp that up, and that's all around the well-being of our staff. It's about staff attraction and retention. We want to be able to attract the top 25% in our industry. All our design, engineering, development, construction is all done in-house by MinRes, has been since the beginning of time. We have over 600 people dedicated to that area that are working on our projects. Some of them have been with us for over 20 years, so we've got an incredibly good core of people right across the business. Iron ore strategy, quite simple. In the Yilgarn, we're going to finalise our 10-year mine plan. Much better than what we anticipated when we first went down there. We're bringing Parker Range and Mount Richardson on over the next couple of years. Utah Point, again, the same. We've got a 10-year plan there. We're just bedding down. That'll provide iron ore out of Iron Valley, Wonmunna, which we've just turned on. And then we're going to develop Lambs Creek around second half of 22, and we're going to develop Wedge around the second half of 23. Ashburton Hub, we hope that's going to be construction ready around August of this year. It's about a 2-year build. It's going to turn out about 30 million tonnes per annum. And then Southwest Creek, of course, we're waiting on the government to work out if they're going to allocate the berths 3 and 4 to us. We're going to operate initially Marillana and Ophthalmia out of that. They're ready to go. It's about a 35 million tonne run rate coming out of there. Just a little bit more detail around Ashburton Hub. 30 million tonnes a year, about 57.5% Fe. There'll be 2 operating mines in Bungaroo South and Kamina. The mine site infrastructure, owner operated by MinRes, drill and blast, mining fleet, next-gen crushing plants, all fairly stock standard for us. Very simple to get it in and operating, as we demonstrated with Wonmunna. We're going to have a purpose-built airport, gas-fired power station, resort-style accommodation at both the port and inland around the mine sites. Supply chain, it'll be a private haul road. We're going to have a fleet of 300-tonne road trains. They'll be fully enclosed, and there'll be fully enclosed discharge and negative pressure sheds at the port. The infrastructure, our emphasis on this total project is to be totally dust-free. Fully enclosed negative pressure storage sheds at the port. Transshipper berth, all conveyors fully covered. Transshippers will be totally enclosed, so iron ore won't see the light of day from when it comes out of the crusher inland till it goes in a Capesize carrier 22 nautical miles offshore. So project delivery, the speed to market is the key. We have got about a 2-year build on that. Approvals are well advanced, and we've had great support from the state government and from their agencies. So thanks for that. It's been incredible. Below average capital cost per installed tonne. So very low cost base in terms of our capital spend for the tonnes coming out. Next gen, low capital, low operating costs, road train haulage system, as I said, similar to operating costs and medium haul rail systems. And the transshipping, again, we're at the bottom end of the cost curve on the transshipping costs from port into a Cape carrier. If I compare that to all of the ports that we're operating out of today, in fact, it would probably be the lowest cost out of all of them. So good result. We're going to put iron ore in that project into ships in the very bottom end of the cost quartile. Southwest Creek, initial ore, it'll come out of our Brockman JV. We're going to develop Marillana and ophthalmia, about 35 million tonnes a year. Marillana is going to come out about 60.5% Fe at about a 20 million tonne a year run rate. Ophthalmia, it'll come out at about 58.5, 15 million tonnes run rate coming out of there. Infrastructure, again, private haul roads, site to port, fleet of 300 tonne off-highway road trains. Next gen crushing plants, beneficiation alongside that at Marillana. Port infrastructure, we're waiting on the government to make a determination on berth 3 and 4. We've been recommended by the port for them to give it to us last year. It was approved in 2008 by the Labor government for the junior miners, and it was widely accepted back then and right up till today that it was set aside for junior miners. So junior miners are defined as those that don't have a heavy haul rail system in port, and we have to use a different method of transport and government operations, so it makes us a higher cost. This will bring us down to the same as the rest of them. The majors have all planned their developments knowing that this is going to a junior, so hopefully they'll be supportive. MRL development will create more jobs than the majors, so we've got to build everything from zero. And generally, most of the majors sitting out there just simply want channel allocation. They're really not looking to build any extra berths. We can deliver it. We've got the capability, we've got the track record, we've got the balance sheet, and we've certainly got the ore body, so hopefully we'll get at that soon. Lithium, fairly basic. We've got 2 of the best sites in the world. Wodgina is the largest hard rock deposit out there on the planet, and Mount Marion sits down further down the food chain with just a bit under 80 million tonnes of rock containing lithium. The outlook is very robust. I mean, in the last 3 months, the lithium demand is coming back in leaps and bounds. We are continuing to monitor it. Mount Marion will continue to run at full production. Our Kemerton hydroxide plant being built by our JV partners Albemarle, due to commission July, August on train 1 and the end of the year on train 2. So we're looking forward to bringing that online. And we're evaluating opportunities to convert all our spod into concentrate so that we pick up the downstream on that. But look, great opportunities sitting in there in the lithium. We're working very hard on making sure that we get that developed, and we're hopeful that we'll be able to turn Wodgina on sometime this calendar year. It'd be good to get it back into action. And then look, wrapping up on our energy, as I said, we're the largest acreage holders in both the Perth Basin and up in the onshore Carnarvon Basin. We're going to drill some holes. This year, we're hoping to put a 4.5K hole down in the Perth Basin. We are surrounded by 3 world-class discoveries, like literally surrounded by them, up there by other companies that have found great gas in the last few years. And we're hopeful of being able to hit some. And as I said, we really want to be, firstly, self-sufficient in our own energy. We want to be able to control that cost. In fact, we want to control all the costs we're capable of. If we can control our energy costs going forward for the next 20 or so years, It's one less thing that we have to be focused on, and we've got other opportunities too, I think, going downstream with oil and gas. So we're going to drill a 4.5K hole in the Perth Basin in the second half of this calendar year. In the next 2 years beyond that, we're going to drill a couple of holes a year, and we're also going to put a couple down in the Carnarvon Basin as soon as we get all the seismic and other work up there done. So innovation, finally. Our recent innovations, next-gen crushing plant, we can mobilise 15 million tonnes to site over 10 weeks. Never been done before in the world, not even close to that. It's a low cost on capital, low operating cost unit. We can mobilise units simultaneously, so we can turn them into 25, 30, 35 million tonne plants equally as quick. Our off-highway road trains are going to bring stranded ore deposits from mine site to coast in the low-cost quartile, and our transshippers are simply going to unlock stranded deposits that haven't been available in the past. Key takeaways. WA's managed COVID and enjoyed more freedom than almost every region in the world. We're an economic powerhouse, and for the foreseeable future, that doesn't look like changing. We're able to keep our business operating through all of these issues that we've had to deal with, and our people have been fully employed. In fact, as I said earlier, we've employed 1,400 new people in the last 10 months, and our business is going to continue to grow about that rate. We've got a great history. We've got a track record of generating shareholder value since listing. We've got a great future ahead of us. We're aiming to add 65 million tonnes of iron ore through Ashburton and the Southwest Creek hubs, convert our spod to hydroxide, develop cleaner energy for our internal use. Mining service, our innovations underpin our ability to develop projects quickly. Our planned projects will grow. Our mining services business will grow at a higher rate than it has in the past. We're going to produce long-term benefits to our people, to our shareholders, to WA, to the whole of Australia. So it's a good story going forward. But it's the end of my presentation. So Hayden, if you've got any questions, I'd be happy to field them.
Terrific. Thanks for that, Chris. Yeah, just a few have come through. Firstly, just on Iron Valley, that is BC Iron in their quarterly. You paid around $20 million in royalties to them. You gave us rough dates on Wedge and Lamb Creek in the next couple of years, but is there anything shorter term you can do to get more tonnes out of Wonmunna to sort of reduce what you're doing at Iron Valley to fill up Utah, given the size of that royalty to BC Iron?
Look, we're doing what we can to. Look, labour's short. Being able to get the operators and the equipment to ramp up at that sort of speed is it's twofold. It's getting harder to get the people, and as we bring them on board, they've got to go through our training and processes to make sure that they're kind of accident-free. Running those trucks is not a walk in the park. I mean, we've got them highly monitored. But look, we're ramping up Wonmunna slowly. It's going to take at least another 6 months to try and land that where we want to. And look, we've just recently increased our allocation at Utah, so we're up there to about 14 million tonne a year. So we're doing what we can, but we've got a lot of moving parts in the business, and look, we're adding a lot of people across the board.
And a follow on from that, then, I mean, Utah itself, I mean, it's not a cheap port to use. These berth 3 and 4 at Southwest Creek. Have you got any idea on what's holding that up? Is it just a government process to actually get that approved? And once, assuming it is, does Utah fit with the long-term business, or do you start just using Southwest Creek?
Look, firstly, no, we'll continue to use Utah going forward. But what's holding up Southwest Creek? We were recommended as the ones to have the allocation. But look, I think a few of the big guys late in the piece have kind of figured out it's the last of the channel allocation. So the government are out there doing a study to try and work out how they can get more tonnes up the channel. And look, there's no doubt they will. I mean, if they put in passing days, there's a number of things they can do. So we're hopeful that that study will be complete by mid-year, and then the minister will be able to make a decision sometime in the second half of this calendar year.
Does what you're doing on transshipping provide an opportunity for more tonnes out of Port Hedland?
Not really. The lead time on the transshippers is about 18 to 20 months, and we're pretty much focused on the Ashburton. So, look, Port Hedland, the answer for us is berth 3 and 4. We've sort of, I think we're going to be successful on that, but we've just got to go through time.
Okay, terrific. And just on Wodgina, I mean, you commented you're hoping to get it going again by the end of the year. I know Albemarle's talked about downstream capacity within the Marble JV in China. I mean, does that need to be secured? I mean, obviously it's either bought or built before you'd restart Wodgina, because you did say you don't really want to sell spodumene to anyone.
Yeah, no, look, what we want to grow our JV, obviously with Albemarle, and if there's, we're looking at opportunities on how we can turn that rock into spodumene. Wodgina, when it comes back online, it's going to be a very low cost producer, and the opportunities to pick up the extra value out of hydroxide is a great growth story for us. And it's a long-term business. You know, it's a 50-year business for MinRes.
So nearer term though, is there a, you know, obviously Albemarle takes Greenbushes to China at the moment. Is there a swap deal or something you could do to get Wodgina going before the downstream capacity sort of in place? Yeah,
look, we think there is. We're talking to Albemarle about that, and they're looking at demand. But it'd be nice to think in the next 3 months we'll be able to make an announcement on what we can do on that, Hayden.
Okay, terrific. And at Mount Marion, I mean, there was sort of discussions previously around, you know, not selling spod there, obviously, which is currently the case. I mean, do you have rights to your half of the production, or does it all have to go to Ganfeng under an offtake agreement? I mean, how does that work, and what are the opportunities with them to go downstream?
Yeah, no, we have the rights to our own offtake out of Marion. We just simply have a 12-month lag on that. So we just let our JV partner know each year in advance whether they're going to get all the product or whether we're going to go send it to another spot. So no, we have the rights to our own offtake.
Okay, and then on the next Gen 2 crushers, I mean, they're impressive things to see, but where do you see the opportunity for those? I mean, obviously iron ore in Australia is obviously one, but even offshore, I mean, you've got this JV with Matt. So I mean, what do you think the ultimate potential for that business is?
Look, Metso are very keen on marketing it offshore, and we're talking to them about doing that right now. We've also got a couple of other opportunities through another partnership that we're also looking at for the South American and Canada region. So 2 areas that are of interest to us, and we're sort of working on those areas right now. So early days, but we're going to see where that lands. We've got some offshore experience, not a lot. We've been up in Ghana in the past and up in Mali going back, 12 or 14 years ago, and it worked extremely well, but we just think we need to start spreading our wings outside of Australia.
Is the next gen business and obviously a potential hydroxide plant with Albemarle in China sort of the extent of the offshore plans at this point?
Good question. Give me a couple of months and I'll come back to you. We've sort of got a fair bit in the air at the moment, and I don't want to derail them by trying to second guess.
Okay, great. You sort of talked about labour tightness at the moment. I mean, have you been able to step in and give Albemarle a hand at Kemerton to make sure that thing gets delivered sort of towards the end of the year on spec? I mean, obviously with the Aussie dollar where it is, I presume CapEx will be higher than what they'd assume. But, if it costs too much, is there another Kemerton going to happen, or is everything going to head to China in terms of capacity build?
Well, look, good question. I mean, the build down there under the circumstances, I mean, the guys down there have done a pretty incredible job. I mean, they've managed COVID and the shortage of labour, so they've done an incredible job. Yeah, and we've got some of our core construction guys down there. We put all the cranes on the site to make sure that they had a good, reliable source of cranes and drivers, and they didn't get any holdups with that. And if they've got any issues down there, I mean, I think over the last, I'm going to guess now, but I think over the last 6 weeks or so, we've been doubling our workforce down there just to help them get it finished. So we've got probably a couple of hundred people down there and probably 30 cranes. So yeah, look, we've been working very closely with them to make sure it gets delivered.
And just on the gas business, Chris, I mean, you sort of talked about, your targets at zero by sort of 2050, but said, it might be earlier than that. And there's certainly some companies pushing for even 2030. I mean, gas reduces your emissions, but it doesn't get you to zero. I mean, what are your thoughts on sort of how you ultimately get there?
Good question. We don't have that plan in place, neither does anyone else. But what we're focused on is transitioning from the nasties. Obviously, getting away from diesel is our priority, and gas doesn't land us there, but it's a stepping stone to, if we can reduce our emissions by 30 or 40 or 50% over the immediate 2 or 3 years, that's where our aim is. And then we're just simply, like the rest of the world, we're hoping on the new developments to be able to come out. We'll embrace them when they do, and we'll just keep growing them into our business. So I don't think that MinRes are going to invent the next emissions-free fuel, but we'll certainly be on board when it happens.
And just back on the iron ore business, Chris, I mean, the iron ore price itself is something I think that mystifies a lot of people, but how do you think about that? I mean, it's obviously comfortably paying for a lot at the moment, the amount of money you're making out of it, but how do you think about your investments at Ashburton and then the Southwest Creek in terms of where the iron ore price needs to be for you to justify those investments?
Oh, look, I don't. It's always nice to be sitting on the top of a rise in commodities where we're sitting now. I mean, and look, it may have a little bit to go, but I don't think the price is going to stay up there. I mean, that's a famous statement, isn't it? I think we've sort of always factored in where we think the price is going to be normalised. And we look at our costs, our FOB costs on both those projects, and they're both, 30+ year projects that are going to tip cash into the business long term. So they're going to be a very large part of our business going forward, as is lithium. But to get a projects, mines that can run that long, there's not too many of them around nowadays. I mean, we're not finding that in gold, we're finding it in lithium. Copper is on everyone's mind out there at the moment, but I mean, everyone on the planet's chasing the great copper deposit. But look, to get this sort of longevity at the cost base we're going to be at, and then on top of that, we'll leverage the infrastructure in terms of the haul roads and the ports. We'll be able to bring third-party ore onto them. We're going to be probably one of those unusual companies in the Pilbara that actually are happy to put third-party ore over our infrastructure, and we do that because we're a mining services group at heart, and we like to spread our risk and be diversified.
Okay, terrific. Look, just one last one, just on the Ashburton project. I mean, you sort of touched a bit on it there, but Bungaroo South does join another ore body, so there's some pretty obvious synergies with the API guys. I mean, what's the ultimate potential production rate, do you think, trucking and then barging through that system?
Interesting. I mean, we've done studies on the road. I mean, we can get past 50 million tonnes on the road. There's obvious synergies sitting out there. There's several billion tonnes of stranded deposits out in that region. In fact, there's more than that. There's probably 3 or 4 billion tonnes out in that whole region. Look, we're just taking one step at a time. We're going to get the infrastructure, and we're going to be running at 30 million tonne. It'd be nice if some of the neighbours wanted to come on board, and I'm sure down the track that some of them will. But look, huge potential.
Okay, terrific. Well, we're out of time, Chris, so thanks very much for the early start and presenting at the Macquarie conference this morning.
Yeah, no, nice to join you, and thanks for letting us share our business with the world out there. So look, thanks everyone, and have a good morning.